Welcome to the Real Estate Pros Show, where we interview real estate investing professionals from coast to coast, as well as the service providers that serve the real estate investing industry. Our goal is simple: share what's working now to help you improve and scale your business to the next level and meet the pros that can help you get there. Real Estate Pros is powered by Investor Fuel, America's leader in helping real estate investors and professionals build the business you need to live the life you've always dreamed of. Let's start today's show. Property insurance for real estate investors doesn't have to be difficult, but it does need to be there to protect you when you need it. MyInvestorInsurance.com not only provides insurance at 15 to 30% cheaper than traditional agencies, it's built specifically for real estate investors like you. You can set up an account in about 2 minutes, get quotes on properties, turn on and turn off insurance for your fix and flip or rental properties in around 2 minutes without having to talk to anyone directly, all through our portal. There's no better way or faster way to make sure you've got the coverage you need to protect you, and no more lengthy policies either. Once you're set up, you're billed monthly and prorated by the day for however long your policy is active. It's powered by MSI, the third largest independent MGA, with 1.5 million customers and more than $1 billion in cumulative premiums written. Get set up today in about 2 minutes at myinvestorinsurance.com/fuel.
Welcome back to the Real Estate Pros podcast. I'm Kristen Knapp, and I'm here with Rob Roham, broker in Silicon Valley and CEO of EQS Equity Shared Properties. I'm so excited to have you here today. Thank you so much for being here.
Thank you. Good to be here. Thank you, Kristen.
Awesome. Well, you've been in, the real estate world for over 35 years. So let's go back to the beginning. How did you get into it?
That's right. Yeah, 35 years in Silicon Valley selling real estate, all kinds of properties. I was in college and I wanted to find a good job that I can support myself through college, and I sort of was told that I can do real estate part-time, make a lot of money, and go to school and live well. So I jumped in both feet, and shortly after realized, no, this is not a part-time job. You got to really work hard at it. And so I just kept going and stayed with it. And it's been a great journey for the last 35 years.
I think that's definitely a misconception of the industry, that it's very flexible and,
Yeah,
you have a
own
lot
schedule, you work when you want, you don't work when you don't want. No, you work. You want to make money, you want to have a good business, you better work.
Absolutely.
Yeah.
And then what's kept you in the business? What do you love about it?
Well, there's a lot of self-satisfaction in this business when you help people buy a property or sell a property. They're happy, they get what they want, and that makes you feel really good. So, yes, a lot of self-satisfaction, a lot of rewards, and just great to work with people, enjoy different types of personalities, different style of people, and meet new people. It can be a fun business if you do it right.
Yeah. And so did you start out as a realtor and then work your way to a broker and now start this company? Is that the evolution of it?
That's right. That's right. I started as a realtor. I worked hard. I worked my way up. I became a broker. I had my own company for several years. I have recently joined Compass Real Estate, which is one of the largest. But this whole new EQS company has nothing to do with Compass. And I got to a point that I realized, a lot of people like to buy real estate in Silicon Valley, but it's so expensive. It's so pricey that not many people can. Yeah, some people have stock accounts, big stock accounts that can take out 2, 3, 4, 5 million and buy a property. Otherwise, man, you just need a lot of money to put down and leave it sit there for several years. And it's difficult. So this whole concept of EQS, equity shared properties, is just the property share concept, just like a ride share concept that we do with Uber and Lyft and what have you. But this is for properties, and what better place to get in and put your money in and invest in real estate, especially in Silicon Valley.
Yeah. Talk more about the Silicon Valley real estate market.
Oh my God, it's a crazy market. It keeps going up and up and up and up, and it doesn't stop. It's one of the best locations for real estate in the entire country, if not in entire world. There's a lot of demand. The tech industry is growing like crazy, and it's going to continue to grow in the next several years. So the demand for housing is great. There's a shortage of housing here.
Stop living on an island and join the #1 mastermind in America for professional real estate investors. Investor Fuel is a community of hundreds of the nation's top investors working together to build stronger businesses and better lives. In addition to the amazing community of real estate investors acting as a board of advisors for one another, Investor Fuel members have access to 100% funding on purchase and repairs for our members only, a health insurance program, and benefits and discounts that more than pays for the membership of most of our members, meaning it's actually costing you money to not be a member of Investor Fuel. If you're looking to scale your business and build a business that allows you to live the life of your dreams, please visit investorfuel.com today and book a call with our team.
And real estate is just phenomenal. It's just doing well, and it has done well, and it's going to continue to do well. So it's a great place to invest in real estate.
Yeah. And for people who aren't really familiar so much with Silicon Valley, like what area does it cover and why is it so important in the tech industry?
Yeah, good question. Silicon Valley, basically what we call South Bay, is from San Jose all the way up to San Carlos. And maybe probably further too before you get into San Francisco. But this is the center of all the tech industry. Google, Facebook, Amazon, NVIDIA, Tesla, Microsoft, they're all here. And there's a lot of people that work in these companies. They're doing well. They have jobs. They have stock accounts. They need housing. There's going to be a lot of growth in this segment of the market and in this area. So it's a good place to be, actually. And the weather is fantastic. The weather is excellent. About 70 degrees year round. I mean, you can't beat that. That's why we pay these high prices here, because it's beautiful here.
Absolutely. I grew up in San Carlos, so it's very near and dear to my heart. And I kind of saw, I mean, I was very young, but I saw this tech boom and all these people come to San Carlos and the surrounding areas. And it was really crazy to see. And now going back, I mean, it's a different town completely.
Yeah, a lot of growth. You come back, you see big buildings, and you're like, wow, where did these come from? Huge. I mean, all over the place. There's just so many tech industry campuses and buildings that have gone up in the last several years. That's crazy. Even for someone like myself who lives here, when I go out to an area that I haven't been to for a year or so, let's say, whatever, Mountain View or whatever, you just go and you go, wow, what happened? Where did these buildings come from? So it's great. It's great.
Yeah. It's a great place to do business. And then going back to, equity shared properties, I liked your analogy of kind of like a ride share. Can you explain just how it works with investors from start to finish?
Yes, absolutely. So equity share is simply a group of people that put their money together and go buy a property. With the high prices here in Silicon Valley, the average home costs about $2 million for a decent home in a decent neighborhood. Nothing fancy, just a decent home. So $2 million, if you have $1 million to put down as a down payment, your payments would be about $7,000 a month. That's not including property tax, insurance, repairs, vacancies, maintenance, and all that. $7,000 and some change is just your mortgage payment. So, and that home, a home at $2 million is going to rent for about, $4,000 to $5,000, depending on its location. So there's a huge negative cash flow. EQS brought the idea of putting our money together.
If you're looking for consistent, high-quality leads, look no further than Investor Machine. Investor Machine isn't just another agency. It's the most sophisticated, data-driven lead generation company on the planet for real estate investors. and serves the role of being not just a lead generator for your business, but a marketing partner that is helping you achieve your goals along the way. Go to investormachine.com to learn more and schedule a call with our team today.
We invest ourselves with the investors to have skin in the game and to make sure everything goes well. So we bring investors together, we pool our money, we pay cash for the property, no mortgage, no negative cash flow. We handle everything from start to finish for the investors. So it's a hands-off, passive investment for people that want to get in and do nothing. We do everything from sourcing, searching, finding the property, purchasing it, repairing it, getting it ready for rental market. We have a professional property management company in place that will handle the management of the property along the way. We have professional accountants that handle all the paperwork. We have legal counsel that takes care of all the documentations for the LLC and the purchase and everything else. So this way, we can all be part owners with no headaches, no negative cash flow, and hold on to the property for 5 years, because really real estate is a long-term investment, right? It's to be absolutely sure that you're going to make money and have a safe investment. You want to hold on to this thing for 4, 5, 6 years. And that's the plan. It's a 5-year hold. We buy cash, have professionals in place to manage it and run it. And in 5 years, our exit strategy is to sell, divide up the profit, and we are going to make profit. We're all going to be happy, and it's a great way to get in and enjoy the ride. It's a great ride here.
I love that. And how does it differ from just a traditional fund?
Traditional funds, well, we do have the fund. We have funds available or property in place. So when we have a property in place, you have an option to say yes or no to the property if you want to jump into the pool or not. Or when we have funds available, then you come in, put in the money, and once the fund is closed, then we go out and purchase a good property. Like I said, we put our own money into the pile, so we have skin in the game, and we have great motivation to find a good property, take good care of it, and make sure it's an area of high appreciation and growth so that we can all make the most money possible at the end of 5 years. So those are the two separate options. And by the way, we also have an option to buy. We have funds for single family properties or funds for multi-units, apartment buildings. So if an investor is looking for more of a cash flow along the way, then multi-family is a good option for them. But if they want a bigger appreciation percentage down the road, then single family would be a next best thing for them to invest in.
Yeah, I think that's a good point to bring up. What if somebody is trying to make some passive income, but they want to have a lower risk? What would be the best option for them?
Yeah, great question. Well, to have more income, the funny thing is what we say in real estate, in Silicon Valley, there is no cash flow. The prices are so high. There's plenty of appreciation, but not much of a cash flow because caps are high. The return on investment in terms of cash flow is not quite there because of the high prices. So they want cash flow. Yes, apartment buildings is still a good option that gives you more income and probably a bit less appreciation because the demand for single family housing is so great here. There's such shortage of housing in this area. That's what causes great appreciation in the next 5 years. So, yeah, I would say to answer your question, if they want more cash flow rather than appreciation, then you have to go out of the area. Sacramento, Stockton, other parts of the country possibly. Then you get much higher return on investment, dollar for dollar. But truly, and I've run the numbers between all different areas, a few sample areas, truly, once you take that appreciation amount over 5 years and divide it up over a 5-year course, you will make so much more money than going out of the area for that little bit extra monthly cash flow. So this is a much better investment, more long term. So 5 years is not that long. Before you know it, it's gone and you'll get your money back.
If you're a new or newer real estate investor looking to launch or grow your real estate investing business, please check out Investor Fuel Club. It's a coaching community, but unlike anything you've ever seen before. And you can actually partner with members of our mastermind from coast to coast on deals right in your market. There's no better opportunity to build a consistent business than to literally partner with pros to help you avoid costly mistakes, avoid the need for capital to do deals, and help you eliminate your fears as you're starting your business. Learn more about Investor Fuel Club at investorfuel.com/club.
Yeah, and I think that's a really good thing to bring up because I think a lot of people probably get impatient and want a return right away, and it's scary to hold property, especially in the changing landscape. What would you say to those type of people?
Well, yes, it is. It's scary because most people buy properties with a mortgage. So you have a monthly mortgage payment. And then if you get vacancies along the way, then there's no money coming in to pay the mortgage. That's what's scary about it. But when you buy all cash, there's no headaches, no problems. Even if you get vacancies, it's still sitting there. The good thing about investing in real estate is a tangible asset. You can feel it, touch it, see it. It's there. It's not going anywhere. It's not like a stock stock market investment where God knows what's going to happen. Who knows if some big company comes in, buys a whole bunch of shares or dumps a whole bunch of shares, and all of a sudden your investment is half of what it was. Real estate is solid, it's stable, it goes up. And when the market changes, and I've done this for 35 years, when the market changes, I've been through a couple of down cycles. When the market changes, real estate goes down slowly. It doesn't just drop overnight. It takes a year or two before it goes down 10% maybe, right? So it's not bad. It's very safe. That's why I tell a lot of my clients, take some money out of stock market and put it in real estate, especially in these changing times. It's solid, safe, and it's not going anywhere.
I think that's such a good, read on the market and a good interpretation of it. Is there a win that you've had recently that you'd like to share? Like maybe a really great return you've gotten from a property?
Yeah, well, I recently, I did a couple of flips in the last couple of 3 years, and they were excellent. And we bought them at fair market value because the market is so hot, multiple offers and crazy last couple of years. Not right now. And you buy at fair market value, and then you add value to the property by remodeling, expanding, and redoing the whole thing to make it look nice and pretty and exciting and desirable for buyers to buy. And that's what we did, and we sold it at a great profit, and it was wonderful. Unfortunately, that market is gone now, and then the flipping thing is risky. It's good if you buy at the right numbers at the right price, then you have plenty of margin. But unlike the last few years where you could buy it at any price, put some money in it and sell it at a higher price because the market kept going up, well, that whole market is not there. It's a little risky, but that's why EQS is a great option right now. It's a solid plan to hold and sit and hold and keep the property for 5 years, and we know it's going to do well. It's going to go up. So
I love hearing you talk about it because you're so enthusiastic and you make me excited about it.
Good. You should get in. It's a great option.
Yeah. So, as you've built this business and as you've just been in the industry for so long, what have been some of the standout lessons that maybe you've learned? Like maybe from a deal going completely wrong and you've learned along the way?
Yeah, good question. Some of the lessons I've learned in real estate is, number one, in real estate, don't be greedy. That's a great lesson because, you know, you, a lot of people want to buy a property and they won't buy it because the seller won't come down an extra 10, 20, 30K, and they walk away from the deal, and they could have made twice that much or more if they would have bought that property because of its location or whatever it offered. So don't be greedy, so what if when you buy real estate and you hold it for few years, you're gonna make money, especially in Silicon Valley. Now, so what's the big deal if you made 100,000 or 90,000 in 5 years, right? The, 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 the thing is to get in, to buy, get in, sit and hold. Like the old saying says, there's an old saying in real estate, says, don't wait to buy real estate and wait. I'll say it again. Don't wait to buy real estate and wait. And that's such a good advice because, and you will do well once you get into Silicon Valley real estate and have the ability and the plan to sit and hold for a few years. There's no you cannot go wrong with Silicon Valley real estate, period.
Yeah. And I think a lot of people, especially kind of with the changes in the market right now, are waiting and want it to be perfect. And they're not going to go in this year, maybe next year.
Yeah.
And you could totally miss out.
Exactly. Rates are high, yes, but some people think that it may come back down to the 3% mark. No, I don't think so. The average interest rate was 5%, on average. There's no timing in real estate. You can't time real estate. You just have to buy and wait.
So what's next for your company?
Well, next for our company is we're going to be promoting EQS among everybody in this area. I'm really excited to be able to help more people buy a piece of Silicon Valley real estate. The guy who started Coca-Cola said, I want everybody in the world to have one Coca-Cola a day. So I want everyone in Silicon Valley or in the United States to have one piece of Silicon Valley real estate. And with EQS and the plan we put together, it's possible for anyone and everyone to get a piece of the action here and own a piece of real estate in Silicon Valley. So I'm really excited about that.
Yes, and I think you made a lot of other people excited as well.
Great.
So
Great.
How can they find you?
Yeah, they can call me at 408-888-5700, or you can visit our website at eqs-properties.com. And you can book a free consultation or just request more information. And once they're ready to take the next step, we can give them all the legal documentation to either review it themselves or run it by their attorney to make sure it's all good and kosher. Everything is done by our legal attorney. Our attorney is a longtime syndicator himself. So he knows everything about syndication, pooling money together, SEC, the Security Exchange Commission rules and regulations, and all the laws that go along with doing this kind of thing. Everything is done right, and it's a good setup. It's a good option.
Awesome. Well, I encourage everyone to please check that out. I think that they can learn a lot from you and hopefully get a piece of Silicon Valley real estate. Okay. Well, thank you so much for doing this today. I think people learned a lot about the area as well and why it's so special. So thank you so much for being here.
Sure. Thank you. Thanks for your time, Kristen.
All right. And everybody, thank you for listening to this podcast, and we'll see you next time. Bye.
Thanks for joining us for today's Real Estate Pros Show. You can learn more about the amazing benefits of the Investor Fuel Mastermind community, including surrounding yourself with hundreds of other rock stars, 100% financing for your deals, and members-only discounts from vendors you're likely already using that, as a member of Investor Fuel, will save you more than the cost of your membership. visit investorfuel.com to learn more. If you're interested in joining us as a guest of this show, please visit investorfuel.com/pros to apply. You can also check the show notes for access to free resources, how to get access to world-class lead generation, and much more. Don't forget to subscribe so you never miss another episode. Have a great day. We'll see you on the next show.